26 years of CNBC TV 18.
Stocks on Wall Street end the session lower with the Dow losing over 200 points. The 10-year yield continues its recent run higher despite expectations that the Fed will cut rates this week. Markets in Asia are relatively lower following the losses on Wall Street. Investors also look ahead to the Fed's decision. The GIFT Nifty, though, is indicating a gap down start for our own markets. Crude prices fall more than 2% after Iraq restores production at an oil field. A firmer dollar and fresh signs of softer fuel demand also put pressure. Gold prices, though, inch lower as investors show caution ahead of the FOMC meeting. The DGCA receives Indigo's response to the show cause notice over large-scale disruptions and cancellations. Airline says it's not possible to pinpoint exact causes yet and seeks more time for a full root cause analysis. Civil Aviation Minister promises strict action against Indigo in Parliament, says that the airline did not flag any issues before the mass cancellation of flights. And US President Donald Trump indicated potential new tariffs on Indian rice, citing dumping concerns and aiming to support US farmers. This comes ahead of the US trade delegation that is arriving in India for a 2-day visit today. Good morning. You're watching Power Breakfast here on CNBC TV 18 this Tuesday morning in the Mumbai News Center. I'm Hormuz Fatakia. Let's first start off with how the Asian markets are faring this morning. And it's a relatively subdued start there as well. It was a quiet session on Wall Street. Indices ended below the flat line, and most of the indices across the Asia Pacific are also trading below the flat line. The Hang Seng is down 0.3%. The Taiwanese index is down by 1/4. The Nikkei is down by 1/4. The Kospi, the South Korean index, the outperformer of the year, down around 0.5%. And the Shanghai Composite too, trading just below the flat line. So most of the indices are trading in the red, but not alarmingly lower ahead of an important decision from the US Federal Reserve that takes place later this week. And pull up the GIFT Nifty though, and after the kind of session that we had yesterday, the implied open showing no signs of that abating as of now. 106 points lower is what the implied open is suggesting. So we are most likely to open gap down, and today also happens to be the weekly expiry of the NSE contracts, so that volatility will also have to be taken into consideration. But to set you up for today's trade, our research team is here with the trade setup, stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. Firstly, Vivek is here to get all the market cues we need to watch out for today. Vivek, good morning.
Well, good morning. Market cues, especially given the kind of fall that we saw yesterday, not looking too good. In fact, even overnight, all of the US indices managed to end with marginal cuts. Along with that, oil prices too ended lower, almost 2%. Brent now hovering around the $62.5 a barrel marker. Yesterday's market action was extremely weak. In favor of the declines, major pain across the broader markets. Broader markets advance decline ratio was very, very weak. Along with that, Nifty failed to hold on to the 26,000 level as well. Almost 46 stocks out of the 50 in the Nifty ended in the negative territory. The mid-cap index saw the biggest fall in over 4 months, and along with that, most of the sectoral indices, in fact, especially the defense and the realty, saw significant selling pressure. And along with that, two stocks that clearly stood out in terms of weakness: Interglobe Aviation. All of the words regarding the kind of passenger fallout that's been seen. Along with that, analysts pointing out elevated cost structures, and Keynes Technologies continues to fall almost 30% lower the last 4 to 5 trading sessions. Now, in terms of IPO action, primary market action, Corona Remedies, that's particular IPO has been subscribed 62%. Wakefit IPO has been subscribed 15%. Key cues to watch out for: remember, the Fed meet starts off today. Asian markets, GIFT Nifty, all of them indicating a negative or a mild start to our markets today.
Vivek, thank you for that update. Over to Ria for the stocks that you need to keep an eye out for today. Ria, good morning. What's on your list?
Well, good morning, Homer. Starting off with M&M, which has come out with its business update for the month of November. Total sales volume has gone up by 19.6% compared to the previous year at roughly 91,839 units. Even the total production volume has gone up by around 18.4% on a year-on-year basis. ICICI Bank has executed a share purchase agreement to buy 2% of stake in ICICI Prudential AMC for roughly 2,140 crores. Siemens will be in focus after approving the sale of its low voltage voltage motor segment to Inomatics India. The sale is valued at an enterprise value of roughly 2,200 crores and the deal is expected to be closed by June of 2026. L&T will be in focus since the board has approved the transfer of its realty business undertaking to an arm of the company through a slump sale, and with this they will be consolidating the realty business of the company. And lastly, Wellspring Corp is the one to keep your eye out on, since an associate company of the company has bagged an order worth roughly 1,165 crores from the Saudi Water Authority.
Riya, thank you for those stocks that should be on your radar today. And lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. It could not hold on to 26,000, but what's the F&O data indicating on the weekly expiry today?
So normally the term of Monday blues is for when we start the day, but it felt like through the day and after market closed, it was like a Monday blue. We felt that, and we saw a big fall. There was no indication from anywhere that we would see a big fall. And what has led to that big fall? Big selling in by FIs in the futures and options. You take a look at index futures, index options, stock futures, stock options, wherever FIs got the opportunity, they have just done one thing. That's the heavy selling, and that led to big fall, and Nifty just did not even manage to hold to the levels of 26,000. That was the key level of 20-day moving average. Now the next support goes to as low as 25,600. So just look at the index flows. In the index futures, FIs have sold more than 3,400 crore. In the stock futures, they have sold more than 1,300 crore, and similar picture was seen even in the index options and other things. Now FIs long exposure has reduced to 12%. They have reduced long positions by more than 950 contracts, but in front of that, in the short side, they have added more than 16,200 contracts. Now look at what happens to PCR. Put call ratio has slipped to 0.6 versus previous day's level of 1.22. So the indication is that now we have gone into oversold zone. So GIFT Nifty is today indicating a fall of 100 points. I don't think that we would see a fall of 100 points if we go by the put-call ratio and considering the yesterday's fall. So what has happened in the option market? On the call side, 26,100 and 26,000 have seen huge call writing, where there was an increase in the open interest in the range of 1.42 to 1.84 crore shares, while on the put side, 26,000 put has seen shedding of more than 97 lakh shares, and their premium has increased to 85. So support, as I told you, 25,600 for Nifty. Resistance remains around record high of 26,300. For Nifty Bank, support would be around 59,030 and resistance would be around 60,100. Most of the stocks have seen fresh shorting. Now, Godrej Properties, DLF, Bharat Dynamics, Piramal Pharma, all these stocks have seen fresh shorts, and 3 stocks remain in the band: Bandhan Bank, Sammaan Capital and Keynes Technologies.
Sudarshan, thank you for all those updates there from the F&O space as well. Now, flight disruptions continue with around 500 Indigo flights cancelled yesterday. The DGCA is examining the airline's detailed response to the show cause notice. Indigo says that it is realistically not possible to pinpoint the exact cause and has sought more time for a full root cause analysis. The airline has cited multiple triggers such as technical glitches, weather issues, winter schedule shifts, congestions and the impact of the new FDTL crew rostering rules. Now, sources say that the 4-member DGCA probe panel is likely to summon Indigo CEO Peter Elbers and COO Isidar Porquedras on Wednesday as part of the ongoing investigation. Now, the aviation minister has promised strict action against Indigo in Parliament, saying that the airline did not flag any issues before the mass cancellation of flights. In fact, listen in to that bit.
What honorable member has also observed, we are talking about December 3rd, after 1 month. So there was 1 full month of operations in the new FDTL also. Why I am mentioning this point, even though we are saying because of the FDTL this situation has arisen, there have been a lot of internal complications. This is a day-to-day operations thing that the Indigo should have maintained. Indigo was supposed to manage the crew, was supposed to manage the roster through its day-to-day operations. We are there to check if the FDTL is properly implemented or not, and there has been no compromise on that side. And for 1 thorough full month, we have been observing. On 1st of December, we had a meeting with Indigo on FDTL itself. When they required some clarifications, we have given the clarifications also with that idea, and they have not flagged this issue. So everything was running normal till then. Suddenly, we have observed this on 3rd. Immediately, once this was observed, the ministry came into the picture. We are not taking this situation easily. We are doing an inquiry, and we will take very, very strict action, not only for this situation, but also as an example. We will set an example for all the airlines. If there is any miscompliance, any non-compliance or non-adherence for any single person, any entity or any organization or any operator functioning in this civil aviation, we will take very, very strict action so that we set an example in the industry.
So keep an eye out on shares of Indigo as well today. 7 straight days of losses now and market cap erosion of close to 40,000 crore rupees. Take a short break. All the action from Wall Street on the other side.
"26 years of CNBC TV 18. "26 years of CNBC TV 18.
Welcome back. Now in the US markets, the benchmark indices ended lower. The Dow was down 200 points. The Nasdaq and the S&P 500 also ended just below the flat line. The markets are now awaiting the outcome of the Fed's last meeting of the year. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets fell to start the week as investors await the Federal Reserve's last meeting of the year. The Dow was down 216 points. The S&P 500 dropped 24, while the tech-heavy Nasdaq fell 32. Paramount Skydance launched a hostile bid to buy Warner Brothers Discovery after it lost out to Netflix in a months-long bidding war. The company making that announcement Monday. Paramount is going straight to WBD shareholders with an all-cash $30 per share offer. That's higher than Netflix's winning bid of $27.75 per share. The Paramount Skydance offer is the same bid that WBD actually rejected last week, according to people familiar with the matter. Netflix won a bidding war for the Warner Brothers film studio and HBO Max streaming service, but it does not plan to buy WBD's TV networks. Paramount has repeatedly argued that keeping Warner Brothers Discovery whole is in the best interest of its shareholders. And President Trump announcing a $12 billion aid package on Monday intended to help American farmers who have been hit by higher costs because of the administration's tariffs. The money is coming from tariff revenue. $11 billion is set aside for an Agriculture Department program that will offer one-time payments to farmers for row crops such as soybeans and potatoes. The rest will be for farmers who grow crops that are not eligible for that program. That's what's happening here in the U.S. Back over to you in Mumbai.
Bertha Coombs, thank you for that update there. Now, the U.S. Federal Reserve is expected to lower interest rates at the end of its two-day meeting on Wednesday. With the Fed's decision on the deck, Steve Leisman from CNBC says whether the Fed should wait for the inflation data and the payrolls data next week.
The Fed is making the current decision with the delayed, without the data, but it's also putting those forecasts together. And maybe what people don't understand is that when you put a forecast together, a good chunk of what you think is going to happen is based upon what you think happened or what the prior data say. So I don't understand these models that are going to spit out the Fed's forecast for unemployment, CPI, and growth. It strikes me they're going to be kind of worthless, and the market's going to have to really take a key part of the Fed's forward guidance, which does come in these forecasts, with a huge grain of salt. And that's going to stick around, by the way, until March. It's not until March they come out with another set of data. So all of this strikes me that if the Fed is data dependent, I don't see what it would have hurt them to wait a week. If you look at what comes out next week, the jobs numbers come out and inflation data come out. And it's not just 1 month's worth of data. It's 2 months worth of data.
Lots of data points that will be reported after the Fed meeting on Wednesday. Let's also now listen to what White House National Economic Council Director Kevin Hassett had to say about the Fed's December decision.
It looks to me like Chairman Powell has done a good job of herding the cats at the committee, that if you look at the comments that different committee members were making just a few weeks ago, that it looked like they were very evenly split about whether they should cut or not. And I think that Chairman Powell agrees with me on this one, that we should probably continue to get the rate down some, do so prudently with an eye on the data. I think that the Fed chair's job is to watch the data and to adjust and to explain, why they're doing what they're doing. And so to say I'm going to do this over the next 6 months would be irresponsible, really.
Now, US President Donald Trump has signaled the possibility of new tariffs on Indian rice. This comes ahead of the US trade delegation that is arriving in India today for a 2-day visit. Listen in to what the president had to say.
Tell me about India. Why is India allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India
now.
Give
me the countries, if you could. Go ahead. India. Who else?
So India.
Mark it down. What'd you say?
yes, sir.
India, Thailand, China into Puerto Rico, not into the continental U.S., but into Puerto Rico. They've bought the largest brands at retail too, right? So they have an incentive to subsidize their products so that they can keep it on the shelf.
Yeah, who did that?
The Indians own the 2 largest brands.
All right, then we'll take care of it. It's so easy.
Now, the president also suggested that he could target Canadian fertilizers to support domestic production. Listening.
A lot of it does come in from Canada, and so we'll end up putting very severe tariffs on that if we have to, because that's the way you want to bolster here, and we can do it here. We can all do that here, but I would say what you do, you put very severe tariffs on from coming into other countries. You'll be making your own fertilizer very soon.
Take a short break. Cues from the commodities market on the other side. Stay tuned.
"26 years of CNBC TV 18. "26 years of CNBC TV 18.
Welcome back. Manisha Gupta now joins in with all the updates from the commodities market. Manisha, good morning. Some drop in oil prices overnight.
Oh, yeah. And this is on the back of firm strength in dollar, equity losses, signs of soft fuel demand, and the fact that you have seen the U.S. crude inventories gain up by more than 500,000 barrels in the previous week. There, a very sharp decline is what we also are looking at the U.S. natural gas futures. While in the current year, it has been a very strong gain, but when you look at the overnight market, it's a 7% decline. That is because of the strong inventories, record production, and mild weather forecast for the next 2 weeks. But this is going to be an important week. We already have seen a trade negotiation start with the European Union. U.S. is expected to begin on 10th as well. You have the U.S. Fed rate announcement as well coming in. And ahead of that, we are looking at strong moves continuing for platinum, which is at 1.5-month highs. Silver, which is trading near all-time highs, and the gold price is holding above $4,200 an ounce as well, ahead of that most important U.S. Fed meeting.
Manisha, thank you for all those updates there. Of course, all eyes on that US Fed meeting outcome on Wednesday night or the early hours of Thursday Indian Standard Time. Now, a powerful 7.5 magnitude earthquake struck off the northern Japan coast, injuring several people and forcing about 90,000 residents to evacuate their homes. The Japan Meteorological Agency has now lifted all tsunami advisories across the northeastern coastline, suggesting that there are no threats anymore. And while the Asian markets continue to remain lower as we speak, the Nikkei has turned flat. It has recovered some of its losses that it had at the start of the show, but most of the others continue to remain where they are. The Hang Seng is still down 0.4%. The Taiwanese index still down around 0.25%. But pull up the GIFT Nifty still continues to remain. Well, it's the implied open now is below 100 points, so it's a 97-point downtick that we are seeing. Take your leave on this edition of Power Breakfast. Thank you so much for watching. Bazaar Morning Call on the other side.
26 years of CNBC TV 18.